FBAR penalty at a minimum is $10,000, pretty much, per account, per year. So if you have 10 different accounts, 10,000 times on each one, and it can get larger than that. It can be up to 50% of the value of the account that they can go after, which actually, if you do the calculation on it, you could end up having to pay more tax and penalties than ever were in the account to start with, because the 50% values, whatever, can be higher, certainly than what you have now. And so they often, though, the worst FBAR penalties have been enforced when there were people that were already guilty of tax fraud. And so the way they really nailed them, they got them, they get them good on the original penalties and the original taxes owed. But they really smack them when the FBAR comes in. Now, then suddenly, because often many of my clients have not encountered, in general, it's not been encountered much yet, people getting the penalty on FBAR, particularly when they didn't know any better, they weren't aware, expatriates in particular, when there are circumstances that kind of justify, the penalty's rarely been enforced. My experience, at least from my time as a CPA, all in my research, the people that generally get hit with the penalty is they're already committing fraud, and the IRS finds out about it, and then they really hit you on the FBAR, because legally they're allowed to. They can always do it any day of the week. They can, any year at tomorrow, next year they could just decide, okay, from now on, everybody who's late on the FBAR, we're going to give them a $10,000 penalty. And these people would have absolutely no recourse, nothing that you could do, because it's the law. They are allowed to enforce a $10,000 penalty for being late by 1 day on the FBAR, on filing the FBAR, even if all you had was a minimal amount, in a few different accounts, checking accounts that are offshore. But they have the right to do so. They just haven't enforced it. I mentioned earlier where there was a similar thing where the foreign corporation not being reported. For many years they didn't enforce it. Suddenly a few years ago they started enforcing that rule and hitting people with a $10,000 penalty. And it kind of caught a lot of people off guard and surprised. I worked on a case where there was a client that they just made a mistake and didn't file on time. It was purely just a clerical error. They forgot to mail it in. It was something stupid. And that was it. They were just like, listen, the law is the law. $10,000 penalty. I'm sorry. You filed 5 days late. That's all that counts. So
I question, just to be really clear, it doesn't matter how many accounts, if the sum
you could have
on any of them, if you could have 10 accounts and only one of them exceeded 10,000, you still have to report all 10 accounts.
Not like that. If you had 10 accounts, and on 1 day during the year, each one had $1,000 in it, you'd have the obligation to report all 10 of them.
But as soon as
you'd pick the balance on that day, you'd have to technically you're supposed to pick the balance on that day. I know that's hard to do, to be honest. That it can be extremely time intensive to pull that off. A lot of people, I even heard it from the IRS. They can't formally say it, but sometimes it's like, okay, let's take the end of the year balance, because sometimes you can't even get the information to come up with the proper calculation of the daily balance, all 365 days. So they say, just take your end of the year balance and add a little bit more just to be safe. Because basically, if you overestimate,
you're okay.
You're certainly not trying to lie to the trick the FinCEN, the Treasury about how much are in your accounts. That would be really counterproductive it'd be stupid to do that. Underestimating, fine. That's the one thing I would warn people to, not underestimate. But overestimating, you're probably safe, and it probably could save you a lot of time when you're coming up with those calculations. If it's really kind of impossible to come up with the proper calculation.
But how would you verify an estimation?
Well, no, that's the point. You just say, listen, I would love to give you the exact number and find the exact day that I had the highest balances, but sometimes that's not available. And so in lieu of that, when you can't really do that, or it becomes prohibitive to come up with those calculations, and you say, okay, let's do the best we can. So what was your end of the year balance? Can you imagine what part of the year could you imagine your highest balance was? And kind of we'll run with that. As long as, like I said, the key thing, just don't underestimate. that would not look good. If you get audited for an FBAR and they realize that you were underestimating, that wouldn't go over well, because that would appear that you were trying to, in a sense, that maybe you're hiding something. But overestimating certainly is not, wouldn't be effective in trying to commit fraud. And then again, so remember, it can be $1,000 in 10 different accounts. Does not have, you do not have to have 10,000 in any one account. It's the combined on one day. If it gets to 10, that's triggers your obligation.
But as soon as one of your accounts hits over 10, then you have to do it anyway.
No, as soon as all of them get over. Even for certain if one of them gets over 10. But even if all of them, even if you never get above 10, but all of them combined get above 10,
Yeah.
and often people don't realize that your pension accounts, particularly here, pension, Pillar 2, Pillar 3, are counted in the FBAR. They should be reported within the FBAR.
Wait, they should be on the
Pension
FBAR?
account.
They should be on
The
their
second
financial
pillar?
accounts. Yeah. Oh, just about.
Oh,
in
no.
my
No, but the second pillar, first off, I can't touch it.
I know. It's a financial account. Your name's on it.
Okay.
You have legal rights
No,
to it.
it's not on it because it's in a pension fund.
No, you have it's an account. It's a specific account that you have rights to.
It's not on the FBAR.
No.
8938, it's arguable. Something.
My second pillar is not an account.
Afterwards, I'll
Okay.
show you.
All right,
I'll show you
yeah,
after where it is, why it's not.
I didn't realize that.
Every
my
pension
employer
account, pretty much,
contribution was a clear
is
benefit.
you have legal rights to it. Maybe not now, but you will eventually. It's not covered by, well, no, you have legal rights to it, and it's a growth, it's an account that's growing.
Not by
you
much.
paid money. Store. And I'm
Pretty
going to
sure
get to it
not.
later. There are other problems with